Good afternoon. This is Bill Biederman with the closing comments from the Allendale Trading Desk. It is Wednesday, the 19th of May, and again, China Wednesday lives up to its name this morning with announcements that we did sell U.S. corn to China once again. And in the July contract, we closed at $3.59. That was down about 3/4 of a cent after trading on both sides, down 4 cents for the week. Crop conditions are slightly behind last year, and the weak dollar today. And then, of course, the Chinese buying of 2 cargoes of U.S. corn, about 120,000 metric tons, provided support. The market did trade up about 5 cents, 6 cents at one time, and then traded lower on the day pretty significantly down to 363. On the upside, it couldn't get through the 366 level, then fell down to 353.5, but that held support at 351, which is really a key level, and we firmed into the close. In the big picture, the weather is improving, but if the dollar starts to weaken, then major support at the 351 level will provide a low-risk place for people to start buying this market, and we could see some fund buying develop. Now, if you want further comments on the corn, go to the front page of our website and click on our weekly research meeting, which is held every Monday afternoon and provided to you free of charge. And click on the video there and go through Rich's comments about what's driving the corn market. You get some great parameters for trading the market, and then give us a call for latest recommendations. In the beans, we closed at 9.39 3/4. That was up 2 cents for the day. We're down about 14 for the week. The sell-off through the week has been due to the euro instability and improving weather that's expected the rest of this week, and lack of any new sales to China after just, rumor after rumor of 2 to 6 cargoes being sold. But the cash market remains very strong, and the basis gains that we've seen down at the Gulf and in the interior are just really due to a lack of farmer selling and the fact that the processors are starting to run a little bit low on inventory. So if the market can hold this area and it fails to continue on the downside, we're going to expect some aggressive fund buying because they can get in right against support and keep their risks very tight. Resistance is at 960 to 970 on the July. That'll keep rallies capped up there. 931 to 935 major support, which is right where we're at. In the wheat, closed at 469.5. That was up 1.5 cents. We're down about 2 cents for the week. Pretty flat week. Market is traded 45 cents lower though in the last 2 weeks, but that's now put us into an oversold position. And we're still above world market prices, so we can still work lower as the trend is down, but it is very oversold. World supplies remain huge, and that's going to keep rallies capped. Traders are still going to look for rallies to be sold, but a bounce certainly could happen. And then just looking at the chart, just like a 50% bounce would get us a good 20 cents higher than where we're at. So there could be a significant move on that. And it would be providing us a selling opportunity if that happened. Ultimately, 465 right now is key support, and if that fails, then ultimately we probably will head down towards 440, which is where the world market is. In the June cattle, we're at 92.55. That's down 20. We're about 75 lower for the week. We spiked low today all the way down to $91, which is support. Cattle on feed report will be coming out Friday. We expect placements to be up 5%. Cash market is trading between 97 and 98. Supports on the chart at 91 again, and that held today. Resistance is at 93.60. We look for a choppy market ahead of the report. In the hog market, we closed at 82.15. That was up 85. We're still about $1.35 lower for the week. 2 days of lower wholesale pork prices has traders believing that this market is headed for the seasonal decline that we typically see during this time of year, but we don't look for much of a large break at all. Support is at $81. Resistance is at 85.80. In the dollar, we closed at, we're still trading right now at 86.59. That's down 79 today. This market does look toppy. It's extremely overbought, and it has a high of 87.63 today. The euro was a little bit higher. That put pressure on the dollar. The euro was higher today on ideas that basically a total disintegration of the euro is just not realistic, and that's the fear that we've been trading. So a pullback could happen, and if it really got going, it could go all the way down to the $83 to $84. That's how volatile this chart looks. In the crude oil, it's holding the February 5th low. That's at 71.64 in the July contract. 72 266 is where we're currently trading, and it looks like a short-term bottom could be developing. It certainly would be if that dollar started to sell off. So we'll watch the technical side of this thing, and resistance on that chart, if it does rally, is between 78 and 81 cents. This is Bill Biederman. Make sure you go look at those corn comments right on, I believe they're on our front page. No, that's not. That's a different video, but if you just click on the link that says get the rest of the videos, it'll take you to the video page. If you have any problems with that, just give us a call. We'll guide you through that. Our number is 800-262-7538. Have a great day.